Hello traders, I'm going to give you an update on my swing trade with SPXL. That is a 3 times leveraged ETF, so it follows the S&P 500, but it moves 3 times the amount. So if the S&P goes up 1%, this goes up 3%. If the S&P goes down 1%, this also goes down 3%. So last weekend, last week, I released a video going over in a lot of detail about how these trades work, these swing trades. So I released that video on November 20th. So if you want to know exactly why I take these trades and how I take these trades, that's the video to check out. In this video, I'm just going to give you an update of the current trade that I'm in. So we entered this trade around October 16th, and we've been riding this trend. Here, this is kind of a zoomed out view on the daily chart. We're looking at daily candles, and this blue line is the 50 MA. So I got in when this daily candle broke above this one. Again, that video goes into a lot more detail about why I entered there and how I placed my stop loss and all that kind of stuff. But the main message here in this video is the plan, this is really the most important thing about any trading, whether you're doing swing trading, day trading, options trading, doesn't matter. You need to have a written plan and you need to follow it, and you need to track your trades to find out whether or not that plan is working or not. So you can see here that the price action has been pretty interesting on SPXL and likewise S&P 500. So we got in over here, and if we just kind of pretend, this is the day that we got back in the trade, and then look what happens the next day, we get a nice gap up and continues higher. And now we see a little bit of uncertainty on that doji candle, and then we finally get some weakness on these red candles, and you might think, well, let me get out of the trade there because that's an obvious sign of a reversal. And you do that and you miss out on a much bigger move. Now, another option, I think a very popular option with a lot of new traders, is to just follow the bottom of the daily candles on the way up. Now, we would have been stopped out very early had we done that, because if you look at these 3 daily candles, the low is 123.54 on that one, and same thing over here, and 123.52 over there. So we would have definitely been stopped out on this daily candle at 123.52. Let's remember that number, and we'll see where the stop loss is today. So that was way back, that was about over a month ago now. So 123.52, we'll remember that number. And then what happened after that is the price continued to go higher and higher. And this type of price action doesn't happen on every stock. You can't use this, I would say, on really any other stock. This is an ETF, and this follows the S&P 500, and it has very kind of unique and predictable, I think, price action. So it's whatever I'm doing here is not applicable to any other individual stock, but is applicable to any S&P 500 ETF. So then you see us make a new high, 140.74 here on the SPXL ETF, and then a reversal. So now it's looking super weak, and maybe you want to jump out here. Now there's another interesting thing that I want to show you here, is that even as the price comes down, my stop loss follows the 50 MA. So let me zoom out a little bit here, and you can see that even as the price comes down, I'm increasing my profits because I'm following the 50 MA again on this specific ETF with my stop loss. And as the price shakes around and comes down, so here we're at 120.29, and then it goes up to 120.60, and then even as the price comes down further, up higher on the 50 MA, 120.86, 121.05, so on and so forth, 121.25. So even as the price comes down, this 50 MA is moving up because it's a 50-day moving average. So it's not going to be affected very much by these individual daily candles. And now we've kind of entered a consolidation area. And then look what's happening today. Today is the day after Thanksgiving. There seems to be a huge market sell-off, but now things are kind of coming back around. Who knows? We'll see where this thing ends by the end of the day. But still, even with this giant gap down here, the 50 MA is still moving higher. So Wednesday, the 50 MA was at 124.15, and now today with this huge gap down, it's up higher still, 124.37. So I continue to make more money as the days go by, even as the price action comes down. And that's kind of the beauty of trading a plan like this. And let's just say, for instance, that this ends up just being a momentary pullback and that this thing goes higher. I'm going to continue to stay in the trade and the profits will continue to increase. So let me unlock the platform now and I'll show you where my position is, and I'll show you where my stop loss was as of last Friday, and we'll move it in place for today. So there's my position, 119.74. Again, if you align with the top of these candles, you can see that was where I entered. And then I just follow the 50 MA with my stop loss. And as of last Friday, we're at 123.03. And remember, we talked about following the bottom of the daily candles, which is a really popular thing for, especially for new traders, because it's easy to do. It's simple. And there's nothing wrong with it. I'm just showing you what would have happened if we would have done that here. And let's move the stop loss up to where it is according to where the 50 MA is right now, 124.37. Let me just increase the resolution here so it's easier to move this stop loss accurately. 124.37. Well, I'll just put it there for now. It doesn't have to be right on the money. And anyway, I'm going to move it at the end of the day into the exact location wherever this thing closes. But there you can see we're at 124.30. We're supposed to be at 124.37. And look at the bottom of these candles is way down here. So we would have been stopped out of this trade a long time ago and missed out on almost $1 per share of profits that we already have. And we're heading toward the other area of where it seemed like things were going to reverse. So it's pretty likely that we will at least get into that area before the price comes down and stops us out. But we'll have to see. The main thing is I'm just following my plan and doing what my plan says, and I'm not fazed by these intraday moves or even day-to-day moves. Everything is just based on following this 50 MA, because again, if you look at that video that I made last week, you'll see where the logic, what the logic is behind that. But you can just look at this chart and see how this thing follows the 50 MA, comes down, touches it, often reverses, but not always. So that's why I use that as my exit point, because look, sometimes it does break down below it and heads extremely far down below that 50 MA. So it's not a place that you necessarily want to just add and keep on adding to the trade every time it touches the 50 MA, because you never know when that next big pullback or crash or whatever is going to happen. So anyway, I'm not telling you to trade like this. What I'm trying to tell you is that you need to have a plan going into every trade, no matter what style of trading you do, and you should follow that plan 100%, track your trades, and then after time, you'll know whether or not that plan works. Otherwise, you're just guessing, you're trying random things, you're going to get random results. So go into every single trade with a plan and stick to that plan no matter what. Always take your stop losses, honor your profit target, and in the long run, you should be green. Take care.